Darwin versus Melbourne. Which is going to be the better city to invest? Now you may ask, why am I comparing these two cities together? Darwin and Melbourne are so different to each other. The reason is, if you look at all the capital cities in Australia, Perth, Adelaide, Brisbane, Sydney, Hobart, Canberra, they've all had a fairly healthy growth between that 5 to 7 year period. So they've had a lot of growth. The only cities that haven't done as much are Melbourne and Darwin. But if a city doesn't grow, does it mean it's a good investment? No. We also want to see signs of market recovery, and you're seeing that happening in Darwin and parts of Melbourne, and that's why I'm going to compare Darwin and Melbourne in this video. Hi. For those of you who don't know me, my name is Jathu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me, go to my website propertybuyersagency.com.au and book a session with me there. Now, as I said, Darwin and Melbourne are the two different contrasting cities. They can't be different from each other in terms of the population, in terms of the climate and weather, in terms of the economy and the job market, and in terms of the lifestyle and the culture. Two very different cities, and you might be saying, hey, Melbourne is going to win. Why are you even doing this comparison? But just hear me out. I just want to discuss some points in this video which may or may not change your mind about Darwin. So let me just go through this point by point. So I'm going to look at Darwin under 650,000 and Melbourne under 650,000. The reason I'm looking at 650,000 and under is because anything over, the rental yields are going to suffer. They're not going to be good. So I want to keep that rental yield strong and buy good properties. And that is why I'm coming up with that 650,000 number. And in Darwin, I'm specifically going to look at Palmerston, a region which is a satellite city 20 to 25 kilometers away from Darwin. And in Melbourne, I'm going to look at three different regions. One is the Hume region, which is the northern suburbs of Melbourne. Then we have the Wyndham South Council, and then we have the Melton Council. So we're just going to look at three different councils where you can still buy properties under 650,000. Now, I'm going to look at different factors like risk, affordability, rental yields, market pressure, short-term growth potential, and finally let you know which one may be the better one depending on your preference. So let's get into this one by one. So I'm going to look at risk, affordability, rental yields, and market pressure together. So let's start off with the Palmerston region. Okay, so I have a group of suburbs here in the Palmerston region: Bolden, Grey, Driver. So you can find here properties under 500,000, as you can see by the suburb median here. Now you have to take note that 3 or 4 months ago, you were able to buy properties here in the low 400s. Now, they are selling anywhere between 450 to 500,000, meaning that these properties have gone up by 30, 40, 50,000 in just a matter of few months. To look at the 12 months growth here, you can see that it's around that 5 to 10% in most suburbs. The vacancy rate is very tight, and look at that rental yield here, above 6%. So more than 6% rental yields in the Palmerston region. And I want to talk about this affordability score here. So affordability here, this is property. So they've calculated affordability by looking at the median income to the house prices, and if the score is closer to 100, that means that area is very, very affordable for its local residents. And you can see these scores here in Palmerston are very close to 100, and that's because the median incomes in these suburbs are relatively very high compared to the high house prices there, right? And that's why the affordability score is really good. And then I also want to talk about the market absorption rate here, which is also another important parameter. Market absorption, basically in simple terms, is to understand how fast the house is selling. So what it actually means is the number of sales that happen in a suburb per month divided by the total number of properties in that suburb. expressed as a percentage. So if you see that percentage going above 40, that means the pressure in that area is increasing. And you can see the trend here, I've gone through the trends, the trend here in terms of the market absorption is increasing. You can see more than here, sitting at 93%. So market pressure generally is very high in the Palmerston region. This means that it's very good for short-term growth. So you summarize Palmerston, we have really good rental yields, we have really strong affordability, and there is market pressure here. Yes, it's true that this pressure is coming from investors and buyers agents who are already active in this market, but on speaking to agents on the ground, I'm hearing that even in some home opens, there are 10 to 15 groups attending these opens. In certain suburbs, there's owner-occupier demand as well. So that's pretty much what we're seeing in Palmerston. Now let's move to Melbourne and compare these same things. First, I'm going to start off with the Hume City Council. Okay, so northern suburbs of Melbourne, these are slightly lower social areas, lower income areas, a bit of crime as well. So let's look at these areas: Jacana, Dallas, Broadmeadows, Meadow Heights, Coolaroo. You can see the 12-month growth is fairly low, just under 5% on average. The rental yields anywhere between 4.5%, I think, on average. If you look at these different suburbs, vacancy rates are really tight. And look at this affordability score. The affordability score is pretty low, which means that the medium incomes here, typically you'll find it's around $1,000 to $1,200 per week, and the house prices sit at $600,000, which means that it's poor affordability for its local residents, which isn't a good thing here because the affordability is getting stretched in these markets. Market is absorption, I can see it's warming up, right? Some suburbs you can see it at 42%, in Coolaroo 67%, Dallas at 30%, and so on. So it's not a extremely hot suburb, it's just warming up, it's starting to move up. That's Hume. Let's move to Wyndham City in the northwest of Melbourne. And over here, we can see that these suburbs over the past 12 months pretty much did nothing, right? You can see it's been stagnant. These are the suburbs like Werribee, Hoppers Crossing, the Northwest Corridor. And you can see in terms of vacancy rates, pretty healthy overall. The affordability score here is average. I can see certain suburbs, the affordability is good, but there are some suburbs where the affordability isn't that good, but the market absorption, the column here, the market absorption is poor, meaning that this suburb isn't warm, this area isn't warm. It's still a relatively cool market. Prices aren't increasing. We are not seeing much pressure in this market. Okay, now finally let's move to the Melton region. So Melton, we are seeing growth again. It's stagnant. Nothing much has happened over the last 12 months. Rental yields around that 4%. The affordability, again, you can see it is fairly good. You can see it moving around that 70, 71, 80% in some suburbs. So the affordability is fairly healthy here, but the market absorption rate isn't that great. You can see it sitting around that 20-25% and hasn't really moved up too much. So I would say in terms of market pressure, Hume is the best one in Melbourne. Hume's really warming up, whereas Melton and Wyndham Vale is relatively cool. There's not much happening in terms of that pressure there. In terms of affordability, Hume is really poor, whereas Melton and Wyndham Vale, it's kind of average. In terms of the rental yields, I'm seeing overall it's around that 4.5%. Okay, now let's take all this and compare with Darwin. Darwin, the affordability is much better, the rental yields are much better, and the market pressure is also much better. So Darwin, the Palmerston region, is in a different situation as compared to these LGAs in Melbourne. Now let's look at the short-term growth potential, okay, of these two areas, Palmerston region and these three LGAs that I mentioned in Melbourne. Now let's look at this data from SQM Research, which shows the property listings. And if you look at the yearly change, Darwin's the only market that's recorded a negative 24.1% drop. Adelaide has recorded minus 1.4, but pretty much everything else has recorded positive growth, right? The listings have gone out. So something's definitely happening in Darwin for that listings to drop by 24%. That's the first sign that market activity is changing in the Darwin region. It just doesn't drop like that. Stock doesn't drop off by 25% with nothing happening there. So something's changing there. That's the first indicator. Now let's look at the sales volume, the activity, which is the demand indicator, and look at the supply indicator in the Palmerston region. So this first chart is the sales activity. This is over the last 5 years, okay? And you can see the activity, the sales activity is just picking up over the last few months, which is a good sign. The demand in the area is increasing. And if you look at the stock on market for the Palmerston region, look at that. It is dropped by 75%. It's just fallen off a cliff. The stock on market has plummeted. It's gone down so rapidly. Sales volume increasing, stock on market reducing rapidly. This definitely means that there's going to be price pressure in this market moving forward. Now let's look at the Hume region. You can see that the sales volume is fairly constant. Nothing much has happened. Stock on market has reduced slightly, which is why you can see that the market is warming up here. Looking at the Wyndham region, you can see sales volumes have actually dropped. And then when you look at the stock on market, you can see that the stock on market has increased over the last few months, which is why again you're slowly seeing a cooler market in the Wyndham region. And then finally the Melbourne region, sales volume again has dropped and the stock on market has just started dropping over the past few months. And since the sales volumes have dropped in Melbourne, there isn't really too much price pressure there. So in terms of short-term growth potential, Palmerston is really poised for short-term growth. You will get short-term growth if you buy there now. And the market is going to accelerate forwards. Looking at what we are seeing on the ground, there's hardly any property available on the market. Everything is transacting off market. And when I speak to agents on the ground, they're saying that they are working with a lot of buyers agents and investors and transacting a lot of properties off market. So activity in Palmerston and the market pressure in Palmerston is definitely higher than in the suburbs of Melbourne, which means that Palmerston is going to have a better 1 to 2 years than compared to these Melbourne LGAs. Now, so is Darwin similar to Perth? Can we say that Darwin is in the same position Perth was 3 or 4 years ago? Yes, in some ways, and no in some other ways. Yes, because affordability is really strong, which we saw in Perth. Yes, because the rental yields were pretty high. And yes, because it didn't have any growth at all over a long period of time, right? So those are the similarities. But the differences are that during that boom phase, Perth started recording internal migration. There was a lot of migration into Perth, but they're not still yet seeing that in Darwin. But I believe that things are going to change as the economy changes. There are big projects announced for Darwin, like defense spending is 2.8 billion. There's a Beetaloo project, there's a Sun Cable project, there is the Darwin City deal which is running over 10 years, and finally we have energy projects like the Santos Barossa project. So big projects coming into Darwin which will transform the economy and get more people coming in there as well. Now let's wrap it up. Over the next 3 years, I know that Darwin will do better than Melbourne in terms of capital growth. Darwin will go really rapidly. So if you are someone who wants to get that rapid capital growth, I think Darwin would be a better market. If this is going to be a long-term hold, like you want something which you don't have to worry about for 15-20 years, then maybe a lower risk market like Melbourne might suit you. Okay guys, so that's the summary of Darwin and Melbourne. I hope you found it useful. Please like and subscribe to my channel if you liked it, and I'll see you in my next video.